Hello traders, Mark Chapman here. I'm the creator of the trademarked Trap Traders concept. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is the 8th of November 2016. Today is a little bit different because we're going to talk about the up and coming US election. Now I've already discussed, if you want to check out yesterday's email and last week's videos, what type of trading pairs you want to focus on during the course of this election. But one of the other problems that people face when trying to trade these big constitutional referendum, big election type trades is they get very worried about the size of the move that occurs and whether or not they'll get involved, and if the market goes up or down in a very aggressive, quick manner and travels great distances in a short space of time, whether or not they've missed the trade, etc. And I'm just going to focus in on this area here as an example. Now I know this is not particularly huge, but you get the idea. If you were looking at this at the hard right edge and you saw that big drop in price like that, what I want you to realise is that the move is not over. And don't be fearful of a situation like this. Many times traders get very scared of a big move, worried whether or not it's going to whipsaw them and cause them all kinds of problems. The way to approach this is just to drop your position size. Okay, so your risk is your risk is your risk. So whatever your risk on an independent trading event is, entirely up to you. I encourage that you don't take much risk at all. The widely touted 2% for me is way too high. You want to be sort of sub 0.5, 0.3s, 0.2s, that type of figure. Now that's 0.1, 0.2% risk, just so that you're never going to negatively impact your a trading account, especially in a situation like this, because when the moves are quick and big, they tend to be the types of situations where you will get drawn into the emotion of the trade. You'll get dragged into bad processes. I.e., if you take a trade, you've took too much risk, it whipsaws you, you end up averaging into a position, cancelling stop losses, and before you know it, you're in a whole lot of trouble just based around the emotion that was whipped up, the frenzy of that event. Now, of course, if you're inexperienced, you might want to sit these events out, but there's no need to fear them if you go about it in the right way. And what I'm suggesting you do is you don't take much risk, and the risk percentage is the risk percentage. So if this requires a 100 pip stop as an example, and maybe your average stop is 50 pips or something like that, or maybe it's even a 200 pip drop. Let's imagine Donald Trump gets in the White House. That's going to be a huge move. That's going to have a massive impact. And essentially you may look at that in real time and wonder whether or not the move's over, wonder whether or not you can get involved, wonder whether or not the stop's too big. In a situation like that, when it's a big constitutional seismic shift, then that move 9 times out of 10 is not coming back to bite you. I would say 100 out of 100, but of course nothing's 100%, but it's very, very unlikely that you're going to get caught on the wrong side of that. So the way you want to approach it is, if the market does drop 200 pips in a blink of an eye, just drop your position size, but maintain your risk percentage. Or you can even drop your risk percentage and again drop your position size accordingly. The bottom line is to not be fearful of it. If you need to give something a 200 pip stop loss, and you want to place your stop on the other side of where the event began, so as it drops, you want to just go above those, below those structures. You want to drop your size and be comfortable with just taking the trade. There's no big deal. If you do happen to get knocked out of that trade for whatever reason and you lose, you've just lost your risk percentage. Yes, your stop was bigger, but your risk percentage was the same. It was maintained. You didn't get into any trouble. You didn't get over leveraged. You didn't get drawn into the emotions of the move, and you got stopped out, and that's it. You move on. It's no big deal. You gave it a little bit of room, and you still had the opportunity to get involved in that particular event. Now, while you may not be trading your usual size, I appreciate that. However, it still allows you to get involved in some of these events that can be extremely profitable. The one that springs to mind in recent history was Brexit for us. Brexit was a huge event. We made thousands of pips, and that was because of the fact that we weren't fearful of that initial move. It was okay. It obviously has followed through a great deal since then, and that's the point. This is not just a session play. This is not just a day trade. This is not even a week long. This is huge, and potentially can last for weeks and months ahead. So that's how you're going to, I would suggest that you should approach these types of events, not just the US election. You want to scour the world for these big constitutional events like referenda, etc., and position yourself ahead of these events. And even if you don't want to go in before the event actually occurs and you want to play it as the way that we've just described, fine, let the information come out, you know the result, and then you can be certain that you're not taking a trade that's going to whipsaw you, and going in with that bigger stop is not a big deal. If you just maintain your risk percentage, it makes no difference. And even if you feel as if your reward to risk ratios are maybe slightly upside down, right? If you've got a 200 pip stop and you're going to have to go for 300, 400, 500 pips, but don't worry about it too much, because these are such high probability trades. And plus the fact, as I mentioned, these are not day trades. Okay, these can go on for weeks and months. So it allows you the opportunity to participate in these big moves. It allows you to take these trades with confidence, not get drawn into the emotion of it, and then not allow it to whip you up into a frenzy to start making mistakes, i.e., as I mentioned, cancelling stop losses, averaging into positions and getting into all kinds of trouble. So I hope you've enjoyed that information. If you'd like to join me in my trade room today to get analysis on all the pairs that I'm trading going into this and after the US election, I'd love to see you there. Just click the button below to join me in today's live trade room. Have a great day, and I'll see you there.